The US stock markets ended with decent gains yesterday. The highlight, the S&P closed above its 200-day moving average for the first time since December the 3rd, finishing up the day 1.3%. The headline, President Trump says he's open to extending a March the 1st deadline to raise tariffs on Chinese products if the two sides are near an agreement. Back to some data points on the S&P 500. Ken Fisher, he basically is the founder of Fisher Investments, suggested, that the global stock markets could rise anywhere between 15 to 25% or more as a V-shaped rebound aligns with positive factors. His quote, "Don't let the past blind you. 2019 will be great." S&P data-wise, using the S&P 500 since 1925, stocks have averaged 12.4% in the years following all down years. 2 successive negative years have happened, but only during global recession or world war. And he says neither is likely. The S&P 500 has averaged a mind-boggling 34% in the 12 months after corrections bottom out and 47% after bear markets have ended. Hence, an average post-correction rebound implies outstanding 2019 full-year returns. Finally, back to Mr. Trump. In the US, 2019 is the third year of Mr. Trump's presidency, historically the best in America's 4-year political cycle. Year 3, US returns are positive during 91.3% of the S&P 500's history, averaging 17.8%, with no negatives since a mere negative 0.9% in 1939. An interesting thought, December sell-off. I know the S&P had its worst month since 1931. I didn't realise that more than 500 hedges announced to the investors they were closing by year end. As they collided against each other towards the fixed date liquidation door, it forced rapid selling, prioritising speed over price, oscillating or cascading prices downwards. So that's the thought. Over 500 hedge funds closing. Right, let's take a look at the daily chart on the S&P 500. You'll see that close above the 200 DMA. Momentum-wise, a secondary indicator, in my opinion, showing that basically we're ticking up nicely, but we're not yet overbought. We've got a series of higher highs and higher lows. 2700 now, key support below the market. That would be a chart point that I would take great interest in. Thank you.